Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The information shared here is for educational purposes only and is not a recommendation to trade.
Good morning. Good morning. It is Monday, the 23rd of February, 2026. It's 7:52 a.m. Sorry about the redo here. Hopefully you didn't lose too many people doing that. There was some issue with the broadcast. I just decided to just shut off the broadcast as soon as I started. The main things we need to point out this morning is that gold is pushing higher. The big news, of course, is the tariff ruling by SCOTUS, the Supreme Court of the United States, basically overturning the existing tariffs, the selective, punitive tariffs that have been put in place. And what the White House has done is it turned and it issued a 15% levy across the board using an act from a law from 1974. So this, of course, puts the market in an odd position. In either case, gold is ripping up. It pushed through the 5,100 and is trading way up there this morning. The all-time high is around 56.26, and we're seeing oil responding throughout the weekend, really, to the threats by Trump that there will be an attack on Iran to get them to talk or to compromise, and so the market's nervous about that. And then on top of that, let's see, NVIDIA earnings standoff with the AI giant reporting this Wednesday. We look to pre-earnings deleveraging in the Nasdaq as speculators reduce size ahead of the numbers. And overall, we'll look at the levels here. So this is where we are. Let's take a look. There's an issue with IQ Feed this morning. Unfortunately, the data is not correct. They're having some network issues, so I cannot show you the relative indications, as it's inaccurate. So we're gonna dive right into the charts. Let's take a look at the S&P from the get-go. Those of you who are new here, of course, just remember that the goal of the TraderBite is to take a look at a holistic view of trading the markets versus me flashing some special indicator that you need to buy from me or whatever. We don't do that. We're looking at the big picture and we're talking in auction terms. So the goal with this is to basically take a look at what has the market done, what is it trying to do, how good of a job is it doing in its objective, and what is likely to happen next. And based on that, we pick up a bias if there is one. And if we do pick up a bias, then we're looking to trade it to basically come up with scenarios. And then it's up to the market to decide whether or not it wants to fulfill those scenarios or it has some other plans. Okay. So here's the S&P in front of you. This is the 30-minute chart. The reason I'm looking at a 30-minute here is because it keeps just about the right amount of information on the screen. What am I paying attention to here? The blue profiles, these profiles are daytime profiles, and then the orange ones are considered Globex profiles. And what we're looking for here is how the volume, which price is king. We make money off of price, right? But volume is the voters. So think of price as the candidate and volume as the number of votes that candidate got. And every price is its own candidate. Every tick is its own candidate. the market's either voting for that tick, for that price, or it's rejecting it. And we want to keep track of what it's rejecting and what it's accepting. So one of the things I'm going to track is how the point of control is shifting right through the overnight session. You could see that we're tracking up. We had an overlap here last week. We shifted up, and we're shifting up again. Those yellow lines are the VPOC. You could see here is that this is the composite for everything that's on the screen. And what I'm doing is I'm kind of looking at this area from the drop a couple weeks ago. And we're looking at what we've done. And basically last week was pretty boring. A lot of back and forth. We are in balance with an upward skew. Last week, I highlighted this buyer retest zone. This zone comes to us from 2 weeks ago. And you can see that it struggled there on Wednesday. It struggled there on Friday. And we ended up putting the high of the week right into that zone. So this is an important zone for me to target and look at this morning. And what has it done on the downside? You know, once we have an excess low from way back here. Let's zoom out. I'll show you that. This is the excess low area. This is a very clear, once we dropped from 7,000, this was a very clear rejection of prices below 6,800. So 7,000 to 6,800. And then over the last 2 weeks, we've constrained the range to 6,930 from 6,800. And so we have this excess low zone, which is the protection overall for buyers. As long as we remain above here, buyers are still in good shape. My overall bias is to the long side this morning. You could see I put this LIS in last night. You could see in the overnight session while I was sleeping, the overnight session, it came back down and it just ground to a stall and a reversal right in the LIS zone. And as long as the LIS zone is beneath us, it's telling us that the bias is long. And what we have here is a break to the upside, which we have fixed. You can see the single prints here have been filled in, came right back to VWAP, full session VWAP, and we're running into some overhead. This is indicating a collision, which means that there was an offer there that was lifted for size, and it ended up trading out. You can see it in the order flow chart right in here. Whoa, what happened? You could see it in the order flow chart right in here that hang on. Let's do that again. Windows decided to stretch that window. You could see it in the order flow chart right in here as it pushed through the 6,900. We ran into a collision that held in place. So overall, this does look like it wants to trend up. We have cumulative delta is positive. We have very low participation by very large lots, really just hanging out at 900 contracts, lifting the offer. And a lot of that happened on this run up here. So overall, what this picture's showing is that we are standing by to potentially make another attempt at that buy retest zone. This is a pretty decent supply zone. So given all of that, what I just went on and on about, given all that, what I'm expecting this morning for a primary scenario and the side that I'll be trading from is I'm looking for what it does on the open at the point of control. We are above the DGPs or the day generated prices currently, so I'm looking for a consolidation chop in here, probably a slight pullback, and then I'm looking for some sort of an impulse through that high, the overnight high at 69.23. Remember, we have a 98% historical probability of touching the overnight high or the overnight low. I'm looking for the overnight high to be breached, And once it does, I'm looking for the buy retest zone to be taken, and then a pullback through it, consolidate in here. There's an LVN in this zone, and then eventually to start walking its way up. That's the primary scenario. The secondary this morning, if that doesn't happen, I don't know which will happen. The secondary is an open auction in range of Friday that attempts to push that liquidity zone above, and then we're looking for an impulse down, and this is actually the better scenario. We're inside of the prior range, and we start to move away from prior settlement. We get to the LIS battle, this composite point of control here. Lots of volume right here. This is a micro composite volume point of control. And then if it gives this up, this LIS up, it's very, very likely to give us a much better opportunity. So we have 68.50 as the last line of defense, and then it's really open season down into the 6,800 from here. Again, the downside, I don't have a downward bias, but the downside is a better trade than a market that's pushing the upside. That's the S&P. Any questions? Let's see. May I ask you if that bubble would have been red instead of blue? What would mean to you? If the bubble being blue just means that offers held in place. Offers were steadfast. About 500 contracts, 400 and something contracts traded there. If the bubble's blue, it means there's liquidity on the offer and aggression on the buy side. If it were red at the peak, that would mean aggressive liquidity on the sell side. Here, there's passive liquidity on the sell side. They'll take them, but they're happy to. If the buyer's aggressive enough, what will likely happen is that the buyer can move their price, get better prices higher, and offer that liquidity. So you'll see a series of dots as it comes up. If the that big dot is red, it means that the seller is aggressive, which means that there's some urgency there, and they just decided to hit the book on the way up. So they're trying to fill a large order on a push up, and it could indicate stalling at that point. But don't get too caught up. That's a problem with order flow. These guys who just teach order flow. Order flow on its own does not make a strong trader. It does not. Because order flow is supportive of the overall read of the narrative and the context and the bias. That's what makes a strong trader. So you can have a market that has really strong selling order flow, but I'm still going to hold through that order flow. I'm still going to hold through it because at some point, the overall imbalance in the market, the bias in the market is likely to continue. And I don't want some large order or some seller on the tape to deter me from the bigger picture. This is why we create the scenarios. Does that make sense? So somebody who's trading order flow alone, you can make money doing that. Sure, I started my career doing that, okay? So I know what I'm talking about. I used to trade 6,000 sides a day, about 300 to 400 trades a day. So I was basically a market maker in futures. And so I know what I'm talking about. And the better trade, the stronger trade is always the one that's level-headed. And to be level-headed, you have to look at the bigger picture and you have to look at the auction overall. So order flow is like the scalpel a surgeon uses to make the cut. But the narrative is the patient's complaints, the patient's telemetry, their readings, their blood pressure, their blood tests, their x-rays, the MRI, the CAT scan. That's what this chart is. It's the diagnostics, okay? Order flow is the scalpel. Here's where I cut. Here's where I actually perform the surgery. You don't come in as a doctor and somebody says, man, I have a terrible pain in my stomach, and the first thing you reach for is the scalpel and you just cut them open, right? So it's kind of like that. A terrible analogy, but it's kind of like that. It's order flow is just a tool to execute, to take action. It is not it's not the piece that is supposed to decide what we do, right? What we do is decided by the overall narrative. And I know it's boring, and I know it's much cooler to watch someone just take trades off of some chart, but it's real. You can either be entertained or you can learn how to trade. You pick. It doesn't matter. So, okay, so here's the Nasdaq. The Nasdaq's in a little bit different story. Nasdaq, same issue. We've got the liquidity zone here. We have an excess up here. This is the buyer retest zone, same as the S&P, but the NQ is having a really hard time going in either direction. So the news in the NQ is impacted by what's going on in the AI space, much more so than the S&P, because the S&P is more diversified. It weighs more heavily in financials and other sectors, whereas the Nasdaq's very, very sensitive to the tech side. So the Nasdaq, however, has pushed quite a bit, and look at what it did here on Friday. Just an awful, I mean, if you traded the Nasdaq on Friday, you saw this unfold, and it's just a bizarre behavior here. Just very wide two-sided trading, and we are actually below that. We are actually below that at this point. So the Nasdaq looks incrementally weaker to me than the S&P, and looks a little bit more bearish. So you could see the S&P pulled back a little higher, and then it's stuck up here, whereas the Nasdaq went much deeper and is much closer to the LIS zone. The Nasdaq, to me, if it does not find a buyer immediately to push through this last high with a pullback and take out this buyer zone, the Nasdaq's very likely to roll over and move into the buyer protection zone that comes from the buying spree last week, which is characterized down into the 24,450 to 24,550 zone. So the Nasdaq, to me, actually looks a fair bit weaker. I'm expecting the Nasdaq to fail, and in doing so, it may drag the S&P down with it, and we may see ourselves back through the LIS. And once we clear it, we could very easily find ourselves down into the 24,450 area from where we are now, which is, the 24,950 area. That's a pretty decent drop. So to me, scenario one, and there's, again, whenever we have this this incongruence, let's call it, this disagreement, it's likely to be choppy. Secondary scenario, we test the last swing low, short-term swing low in the overnight session, and then we see an impulse to the upside, and now we're back here, and there's liquidity. There's a lot of supply up here that it has to push through, and then we start to clear and push higher. But this is a less likely scenario depending on what news comes out. So that's the NQ. The NQ, I'm leaning short. The ES, I'm leaning long. Both of them have the LIS below, so really technically structured longs in both. But the Nasdaq looks suspect to me. It just seems like it is unable to hold on to prices as well as the S&P can. Crude, has been running up on the Iran nonsense right now. Israel making a big case. Marco Rubio, I think, just canceled his trip to Israel. Netanyahu was here last week. You know, got to get Big Daddy to open his wallet to fund another attack. So here we are. What we have in oil is that we had a pretty good imbalance coming up into this zone here. And now what we have is balance between 67 and 65.50. So we are about to tackle the high side of that imbalance. But I know this is going to sound weird, but I'm expecting crude to stall out here. The technical indications are that there's just quite a bit of supply here. I'm expecting crude to come right back in here and just hold steady right on top of the MCV-POC, which is at 66.50. So crude 66.50 trap is the expectation. That's the primary scenario. I know it looks awfully bullish, but I'm going to tell you that the technical action on crude is saying that it's struggling up there. Secondary scenario, pulls back, consolidates here for a bit where it is now, and then starts to grind through the 6,700. But I would not expect that a break of the 67 is likely to have a quick push through. I expect it to really, really, really grind it out. So this is unfortunately all news driven. And once you take out the Iran premium, where do you end up? You guessed it. You end up at 62.50, 63. So, you know, war doesn't break out and you'll find yourself right back here. The 63, 62.50 zone. So there's about $4 of premium built into this product right now. Okay, gold is in a run. Gold is leaving behind the area that it's been defending for some time now. It's been balancing right in here and has broken out. It's above the 5,100. The LIS is below structured longs in gold. It's currently balancing out, building a fair bit of volume up here, but overall, gold is likely to continue to grind higher given this tariff situation. Remember, whenever there's risk and uncertainty, the market moves to protection. And currently, protection comes in the form of metals, and it comes in the form of treasuries. I know that's a long one. Hopefully, you picked up a thing or two. And I know I'm not doing these as regularly as I'd like. I'm supposed to do them Monday, Wednesday, Friday. But, man, there's so much going on that I'm not able to keep up. Hopefully you pick something up today. I'll talk to you soon. Don't forget to subscribe to the channel and hit like so other traders can find us. Good luck.